Recording. Very good. All right. Well, welcome to the second edition. So you want to be an entrepreneur. This session will be focused on form of business and also on the beginnings of a business plan. Richard Pierce has been our instructor for going on 17 years at the Business Assistance Center and has done many of these series. Richard, why don't you take over? I'm going to share the screen from where we left off with the slides.
Okay, great. Well, our first session, we covered the basics, identifying what an entrepreneur is, talking about some common mistakes made by would-be entrepreneurs and their support of others. We also discuss what I consider to be of paramount importance, developing a family plan, as opposed to just developing a business plan. This week, we're going to move forward with the various forms of business, the options for entry into business, and we'll also touch upon some of the components of a business plan. So let's get started. Options for entry. There are basically three primary options for entering a business, starting from scratch. All of these options have pros and cons to them, but starting a business from scratch, the pro is that it's your baby. You form the business in the image that you see fit. You do not have to correct anyone else's prior mistakes. It is all on you. So that's a good thing. Of course, on the other side of the coin, it could be a bad thing because it is all on you and it is unproven. The expenditure of capital could be significant, or it could be relatively modest. But starting from scratch, it's an unknown field. The other benefit of starting from scratch is that you get a chance to formulate your market, to find your market niche. The business has not existed prior, and it allows you to do your market research, identify where there may be a need in the marketplace or a demand, and for you to fill that demand with your product or service. So starting from scratch is certainly a viable option, and I think most small business people tend to start their businesses from scratch. Another option is to buy an existing business. People think that, excuse me, many people think that buying a business, an existing business, is more expensive than starting from scratch. And this could or could not be a fact. Thank you. This could or it could not be a fact. The good news about buying an existing business is that the marketplace has been developed. There is a following. There is some demand for the product or service. If this were not so, the business would not be in existence to be purchased. My allergies are kicking in this morning. I must excuse myself. Buying an existing business, you are buying someone else's creation. have the opportunity to mold them from scratch. And this could be a positive or a negative thing. For example, if you believed that your business should cater to the high-end crowd, but the existing business is marketing itself to the lower end of the marketplace, you would be hard pressed to change that business's image midstream. So one must give a lot of consideration prior to buying an existing business that the culture of that business matches what you are attempting to formulate, that the personnel in place work to your standards, that the product or service meets your criteria. Very important that all of those things are in alignment. If not, you may be buying future headaches and problems. The last option for entry that we'll touch upon is purchasing a franchise. There are over 750,000 franchise locations in the United States to date. And what franchising is, it's simply a form of marketing and distribution in which an owner of a business system, who is called the franchisor, grants to an individual or group of individuals, the franchisee, the right to run a business selling a product or service using the franchisor's business system. Most of us can think of probably a half a dozen franchise operations, and they vary in terms of costs of entry, but they have several common characteristics. Can someone name a franchise for me? Amber, name a franchise that comes to mind.
Wendy's.
Yep. What about you, Laura?
McDonald's.
Yeah, and that's common. Both of you came out quickly with food franchises. But the reality of franchises are that they are in virtually every industry that you can conceive of. We don't think of car dealerships as franchises, but in reality, they are.
Oh, that's true.
They are. Now, what is the good, the bad, and the ugly about a franchise? The good is that you are purchasing a proven entity. Excuse me, my throat is killing me. You are purchasing a proven entity. The franchisor has done the work of establishing a system, developing a market, and testing the product or service to make sure that demand is there. Now, franchise operations run the gamut in terms of cost also. A franchise such as McDonald's, you could probably anticipate your entry fee or franchise fee, as it's called, being somewhere in the upper category of $500,000 or more. However, you could probably purchase a food truck franchise for a fraction of that amount, $20,000, $25,000. So the cost of entry varies widely, but what they do share in common is that the franchisor establishes where you must buy your product, the look of the franchise operation, all of the vendors that you can deal with, including paper suppliers, sanitary companies, et cetera. So there are the local franchisee of a McDonald's has a lot of leeway and they're making a ton of money. Well, they may be making money, but unless they are willing to put in long, hard hours, they're not going to make it. And their flexibility in terms of purchasing power, advertising, et cetera, is dictated by the franchisor. Another fee that comes with owning a franchise operation is the royalty payment. Typically, this payment is a percentage of revenues that are paid on a monthly basis. So you have your one-time entry fee, the franchise fee, and then you have your royalty fee, which is paid pretty much as long as you own the franchise. The good news about owning a franchise is, as I say, it is a tested entity, and most viable, reputable franchise operations will restrict the territory in which you operate. So by being a franchisee, you may have 5 square miles in Hamden or the town of Hamden. So it does give you some level of protection. The other benefit of owning a franchise is the home office support, which provides product testing and also training for your staff. So yes, a franchise is expensive, but you do get certain benefits and perks that go along with that ownership. Any questions on those options for entry before we move on to something else? Nothing? Okay. All right. What's the first thing you need to do when you're looking to start any business? Whether it's from scratch, whether it's buying an existing business, whether you go into a franchise, you have to take stock on what you bring to the table. And I cannot tell you the number of times when people have come into the Business Assistance Center wanting to open up, let's say, a restaurant. And upon questioning, I find that they have no restaurant experience. They're not a cook, but they like people. And they feel that this is going to lead to their success. No. What you need to do prior to starting any business is assess what your skills are. What can you do? What is your experience? What have you done? What is your knowledge? What is your knowledge in the field in which you are looking to enter? And what tangible resources do you have to bring to your business? Money. As we used to say in banking, you need to have skin in the game. Okay? All right, let's move on and talk about the various forms of business. Sole proprietorships. Sole proprietorships are probably the most common form of business for fledgling entrepreneurs. In essence, it is an individual operating as a business. They operate under their social security number. Lost my train of thought when I popped in the cough drop. They operate under their social security number, and they assume all the risk and personal liability for the business. In other words, Under a sole proprietorship, you and your business are one and the same. It's the cheapest form of business to enter into. And you can really get started at any time you want. As I say, you operate using your Social Security number. What we do recommend, if you are going into a sole proprietorship, is to at least register your trade name. You've heard the expression DBA, that stands for doing business as. So if I were operating a sole proprietorship, I might be Richard Pierce doing business as the Acme Company. By registering your trade name, it really just protects that name from being used in the town in which you are headquartered, from being used by any other trade name. Many people make the mistake of thinking that by registering their trade name, and you register, by the way, your trade name at City Hall, typically the town clerk's office. And there is a slight fee, and it varies from town to town. It could be anywhere from $10 to $25. But people make the mistake of thinking by registering a DBA or a trade name, they are shutting out anyone else from using that name in the state. Not really. And it's really not even true that you're shutting them out from using it in the town. And here's why. The example I gave, Richard Pierce doing business as the Acme Company. Well, that's good. Dale Croup can come along in the same town and operate Dale Croup, or not Dale Croup, but the Acme Company LLC in the same town. And Laura, you could come along and open up the Acme Company Incorporated in the same town. In the eyes of the law, those are three different business structures. Okay, so don't get a false sense of security. If you own a home or any significant personal assets, retirement funds, savings, what have you, I would not recommend operating as a sole proprietorship because, as I stated earlier, you and your business are one and the same. If something happens in your business operation, let's say you have a retail facility, someone comes in, trips, falls, breaks an arm. They ultimately would sue the business, but they could also sue you personally, and all of your personal assets are at stake. Moving up the food chain, partnerships. Partnerships are really nothing but sole proprietorships with more than one person. Again, the partnership could operate using one of the partner's Social Security numbers. Now, with partnerships, there are a couple of things you can do. You can have a limited partnership where the partners act as investors. And I think, Amber, this might be something that you are looking to do with your sister. The limited partnership, the limited partner or partners can limit their liability to the extent of their investment in the business. So it does give them some level of protection, but there must be a general partner. And the general partner, just as in a sole proprietorship, all of their personal assets are on the line. Another form of partnership could be a limited liability partnership, which is similar to an LLC, but the limited liability partnerships, again, would, well, before we talk about that, let's talk about the LLC because it gives a greater distinction. LLCs, limited liability companies. I see the slide says limited liability corporation. That's wrong. It's limited liability company. Limited liability companies allow you and your business to be separated, two separate legal entities. Limited liability companies in Connecticut are formed at the Secretary of State's office. It is not rocket science to form an LLC. You do not need an attorney. You can get the paperwork from the Secretary of State's office. You can pull it down online or simply call them and they'll mail it to you. It's about 4 pages. And I think just about anyone should be able to fill out the initial paperwork. Along with the application at the Secretary of State's office, LLCs must have a federal tax ID number. That number is acquired from the IRS and it's free of charge. Hey! That number acts as your LLC's social security number. As long as the company is in existence, it will have that same federal tax ID number. Now, what are some of the benefits of an LLC? As with a sole proprietorship and partnerships, the members, that is what the owners of LLCs are called, the members of the LLC are taxed based on their individual tax basis. The corporate tax basis typically is higher than our individual tax basis. So you have a tax advantage there. You also, the LLC is never quote unquote taxed. The flow through is to the individual. So if the LLC makes a profit, that profit goes to your individual or joint return. And if you look at your federal return, you'll see a line item there that says profit or loss from business activity. That is where that entry is made. So if the LLC, say, made $10,000, your tax basis would be increased, your income would be increased by that 10,000. On the flip side, if the LLC lost 10,000, your tax base gets lowered by the $10,000. Everyone clear on that one?
Yes.
Okay. The LLC is probably the most attractive business structure going now because the paperwork is relatively modest and it does protect your personal assets. So the example that I gave of you owning a shop, someone coming in, breaking an arm, they sue the business. And because we are such a litigious society, they would probably try to sue you as an individual. However, with the LLC setup, unless you maliciously had set out to hurt this person or did something just totally wrong, the courts would not allow them to get to your personal assets, and they would only have recourse to the assets within the LLC. Okay. So the two factors that make LLCs attractive, the tax treatment and the fact that it is a separate legal entity. Those are very important. Any questions on the LLC? Okay, corporations. There are two primary forms of corporations. There are a lot of different forms really in the tax code book, but for our purposes, you have C corporations and subchapter S corporations. C corporations are what one might typically think of with big business. Stocks are sold, the owners of the corporation are stockholders, the stock is traded over the counter or in a marketplace. That's what we typically think of with corporations. Subchapter S corporations look an awful lot like LLCs. And going back, a few decades ago, that was really the only mechanism that entrepreneurs had to separate themselves from their business. LLCs were started, I believe, in the 70s. So prior to that time, subchapter S corporations, that was the only game in town. Since LLCs came on board with less paperwork, less regulatory requirements, most of us that had subchapter S corporations have switched to the LLC format. The bad news with corporations, you often hear the expression double taxation. Well, that's because what happens is the corporations pay taxes on their profits, and then the individuals, the stockholders, wind up paying taxes on the dividends also. So it is a little bit of a form of double taxation. I'll pause here and just answer, since we have such a small group, any questions that anyone might have over what we've gone over thus far.
I do have a question. This is Laura. In relation to the sole proprietorship versus the LLC. I know my husband's business is currently a sole proprietorship and we're transitioning it into an LLC. The tax rate you were talking about, right now we go in like this is Schedule C or K or something like that for his business. Would that be the same way we would be doing the taxes, or is it actually more of a corporate tax form that we'd have to be filling out?
No, the taxes would be, the rate of taxation would be
The rate.
identical. The
Okay.
rate. Now, is the LLC going to be a sole member LLC, or will more than one person own it?
Well, that's what we're trying to work out now, what the logistics is, if it should be more than one owner. And because right now he was looking at the difference between an LLC versus an LLP, the partnership. Because he does have a few people that were interested in maybe being silent partners or silent members. So that's what we're trying to decide on right now.
Okay. Well, I would say the LLC format.
Okay.
And if you go with more than one member who are the owners,
Yep.
then the LLC will have to fill out a separate tax return every year.
Okay.
If it were a sole member LLC, no need for the separate tax return.
Gotcha. Okay.
Now, one thing that I can stress with the LLC, and since you said he's looking to have investors, some may be active, some may be silent,
Mhm.
you should fill out a Jeez, an organization plan, not an organization plan, an organization agreement.
Okay,
And in essence, what you do in that organizing agreement, you would spell out the percentage of ownership,
mhm,
the way that the revenues will be split, and what the events of dissolution might be.
okay,
For example, the LLC can live on if a member decides to resign, or it could be established that once a member decides to leave, the LLC must be dissolved. And basically the members that are left would form another LLC.
okay,
But there's a lot of different ways to structure the LLC. The ownership interest does not have any bearing at all on the revenue sharing. In
okay,
other words, you could be a 50% owner, but take 75% of the revenues or 100% of the revenues. So that's why I like the LLC.
mhm,
But all of that has to be written down in the articles prior to, getting going.
okay. Well, that's what we're in the process of right now, so thank you.
Okay. Anything else? Okay. The last thing we're going to touch upon, and next week, if my voice holds out, not next week, week after next, what we will get into in detail is the business plan. But I believe that you should have received a business plan outline. Did you get that?
No, I did not.
Okay. Well, essentially, there are two reasons for writing a business plan. Internal purposes, it serves as your roadmap. It basically forces you to think through all of the issues that you will face in your business prior to getting started. Things such as what happens if you are sick? Who will take over? What type of employees are you going to have? Full-time, part-time? Who's your market? How are you going to get to the market? So all of those things are forced upon you to think through, which hopefully will lead to a greater chance of you succeeding. Then you have the external factors. Any investor, any lender, any future partner will insist upon seeing a written business plan prior to putting their money into your business. And it makes sense. It's the only way they know that, first of all, you've thought through all the issues. And secondly, it gives them a sense of when they may get a return on their investment. So internal and external reasons for establishing a business plan. Let me go through a couple of highlights or main sections of the business plan. I'm not going to talk at length because we will get into this when we get into the business plan. But every business plan should have a description of the business. Okay. Well, let's start at the beginning. Basically, you need a cover sheet. Okay, what does your cover sheet have? It has the name of the business, the ownership, etc. Your statement of purpose. Why are you writing the business plan? And we talked about internal and external reasons, but we also have writing a business plan to obtain financing, writing a business plan for marketing purposes, writing a business plan for your own internal planning. The executive summary, although it goes up front, I tell people to write that last. And the reason for that is many times people start writing their business plans thinking they're going in one direction, and they write their executive summary and try to head in that direction. And as they write, they discover things such as, instead of buying a building, maybe I should rent. Instead of opening up in 6 months, maybe I should wait until next year. So the executive summary is the last thing that I have our clients write. Every business plan should have a table of contents, of course. The description of the business, which includes product, services, location, hours, things of that nature. A market analysis. Who is your competition? Even to this day, I laugh when folks come in with an idea for a product or service, and it could be a unique product or service, but when they tell me there's no competition, I laugh. There's always competition. Always competition. I don't care if you've invented the best whatever, there's competition for it. So it's incumbent upon you to identify who those competitors are, what those competitors' strengths and weaknesses are, so that you can effectively compete against them. You need to develop a marketing plan. Who are you going to market to? What is the demographic? Is it going to be a mixed demographic? How are you going to get to this market? I use the example, if you're trying to market extensively to the baby boomer generation, my group, social media, yeah, we use it, but I think a lot of us are still reading the newspaper. So, you might want to do that. If you're marketing to the younger generations, then don't be marketing in the newspaper. You better be on social media. So know and identify who your market is and match how to reach that market. The management of the company. Who's going to do what? Who's going to make the bank deposits? Who's going to hire and fire? Who's going to train? Who's going to buy the product? Who is going to market the product? So all of those factors need to be considered and laid out in detail in the business plan. I've had people come in and give me 2-page business plans, and that's not enough. On the flip side, I've had people come in and give me 50-page business plans. That might be a little too much. It all depends on whether you adequately cover these subject areas. Personnel. Who do you need? Part-time, full-time, senior citizens, young kids. Who do you need? What is their education? What background do they need to have? Do they need the ability to lift a certain amount of weight? Do they need a driver's license? Et cetera, et cetera, et cetera. So all of these things are covered ad nauseum in a business plan. Now you ask, if I do all these things and put in this time and effort, will I be guaranteed to succeed? No, you won't be. But I can guarantee you, if you do not write a business plan, you have increased your chance for failure. So that's to cover during this session. We still have a little bit more time. So if anyone has any questions about what we've covered or anything else, now's the
stated
time
you
to raise the
emailed-
question.
Sorry, you stated you emailed the business outline. I didn't get that in the email. Unless you're just talking about what you wrote in the body of the email.
We did not mail the whole outline. What we mailed was, it should have been just a, should have been an outline, yeah.
We'll make sure we get it
Okay.
to everybody today or the next day.
Okay,
Okay,
thank you.
thanks.
Anything else? Did you get the other handouts?
I got them from the first series.
Yeah, they got the agenda for today. That's all I had.
Right.
Ah, okay, I see what happened. Okay. We'll get the material to you.
Okay. Do you recommend doing the market analysis with a company or just doing your own research online and, with knowledge of the town and different businesses?
I would recommend you doing it yourself.
Okay,
And here's why. You hire a company to do it, they'll do a nice, thorough job, but they may not touch upon, they may not cater to exactly
Okay.
your business. And, it's a very simple thing to do. People ask, okay, how do I do an analysis, a market analysis, or an analysis of the competition? It's fairly easy. You pick up a phone
Yeah.
and you call some of the companies that you think might be competitors and just ask them, what is your rate or what have you? You go online and look at their websites and see what they purport to be doing. You can go to trade groups online and see what the trade groups say about the industry. Typically, the trade groups will talk about more of a global situation, but you may be able to pick up some nuggets about regional trade groups or even statewide groups that you can tap into.
Okay.
And a lot of industries have membership groups that you can take advantage of and get information that way. There used to be an organization in Connecticut that I would recommend, but I think they've changed their focus, called CERC, Connecticut Economic
Resource Center, yeah, they're called Advanced CT now. So
Yeah.
unless you're in one of the sectors that they focus on, they're probably not going to be able to.
Yeah, they've changed their focus. So
Well, to accentuate what Richard is saying, I've also started businesses and have done a lot of analysis of certain sectors of the economy. And there's nothing like you getting a feel yourself for what's going on in an industry, talking to people, having more of a personal conversation with them and getting a feeling yourself whether something's a good idea. Whenever somebody does something for you, you're going to pay for it,
Right.
obviously. And it may not drill down to the catchment area that you're thinking about. And it may not, and again, you're not going to pay as much attention to the minutia than if you did it yourself. You're really going to know and get a gut feeling, which, is not really on this list, gut feeling, but there is a gut feeling that goes along with whether you should invest your money in something or your time. So I do think I would agree with Rich that you should do it. Now, there are pieces of it that you can get from other places,
Right.
but it's usually more global.
Okay, thank you.
I'm gonna stop sharing the screen, Rich. Is that all right?
That's fine.
Okay.
Okay. Well, if there are no other questions, Amber, anything on your mind?
I just wanted to know, as far as marketing data, how far back makes sense? Because I know if we look like online, there might be information that's within 5 to 10 years old that may or may not still make sense just because of the industry. I don't have a specific example right now, but how far is too far?
Yeah, if you get past 5 years, you're talking ancient history.
Okay.
I would say, the more current, the better, of course. But if it's older than 5 years, don't even bother.
Okay.
The world has changed.
Right.
And I think and projections, the same exact thing, more than even 3 years is a gamble, because the marketplace has changes for whatever industry you're in. I mean, who would have thought that
Right.
Walmart would be eclipsed by Amazon?
Right.
I mean, big time eclipsed. You would have thought nothing could overcome their size. So, looking at 3 years data going forward is what I look at. The max, you could go 5, depends on your industry, but, food delivery. I mean, Amber, you're going to be potentially in the food business.
Right.
Who would have thought that Amazon bought Whole Foods, and people in Hamden are, complain there's not enough grocery stores. There doesn't need to be grocery stores anymore. And because of food delivery, and
Mhm.
this is way after Peapod. So, I would be careful going forward as well.
Dale brought up projections, and I really dropped the ball there because that's one of my favorite things to talk about. And when I talk projections, I'm speaking about financial projections. That is a very critical component to the business plan, in particular, cash flow projections. It's not just an academic exercise, it's a management tool. What cash flow projections are about, it shows all the income coming in or not income, all of the revenue, all the money, the dollars coming into a business and all the dollars going out of a business. Typically with a new business, there is more money coming in or more money going out than coming in. What that does, it creates what we call a gap. The cash flow projection helps you to identify what that gap is. And that's critically important. More businesses fail because they run out of cash than anything else. So by identifying that gap, now you know going in what you can expect you need to fill. And how do you fill that gap? By taking money out of your savings, by borrowing, by getting an investor, by getting a partner. That's how you fill the gap. But without being able to identify the gap, you're just shooting blind. And that's no way to start a business. So we will talk ad nauseum about cash flow projections when we cover the business plan.
Okay.
And how to construct them. It's a little scary if you haven't done it, but there are programs that can help you. I have a program that I developed on Excel, and I can send it to you and work with you to help you get there. Okay.
I just have one more question.
Sure.
And as far as the business plan itself, how long is it valid for? Like, I get, you have updates with your company over the years. Should that be updated accordingly, or
I'm
should
sorry,
it?
how long is what?
How long are business plans valid? Like,
Oh, okay.
should we be referencing the same business plan as our business is expanding and growing? Because I know obviously updates and such. Yeah.
Yeah, I mean, you should visit your business plan on an annual basis. Just read it over. Now, circumstances will change. And when the circumstances change, that's when you modify that section of the business plan. For example, 3 years from now, you might want to expand, set up more than one location. Who knows? You know, if you're very successful, you might want to look into becoming a franchisor and you actually selling your system to others. So there are lots of options, but you know, don't change it annually, but read it annually. And if changes are needed, by all means, make them.
Thank you.
Oh, I see Jay is back.
Yeah, we're just about done, Jay.
All right, any other questions?
We will send the recording in YouTube format
Okay.
versus this format, because then you have to have a code and all that. The next session is October 7th. We'll do 9 o'clock again.
Okay.
And we'll send out the materials in advance, the probably more detailed materials this time. And again, we'll be sending out a recording of this, you know, by early next week.
Okay.
All right, everybody good?
Thank you.
Yes, thank you.
All right, we'll talk to you later. Have a great week.
Take
You
care,
too.
everyone.
Thank you.
Thank you.